Welcome to another Thales tutorial. Today I'm going to talk about how Thales positional markets and overtime sports markets are priced using odds. So we'll talk about how positional tokens for markets are priced, and the answer is odds. And we'll talk about how these odds can change throughout time, and that can affect the price of different positions throughout time. We'll explain how prices kind of work and how they directly translate to payouts if successful. And then I'll go through some examples for both Thales positional markets as well as some overtime sports markets. So pricing is based on the odds data that is transmitted to the blockchain via chain link for both Thales and overtime. Now, Thales uses different factors such as the Black-Scholes pricing method, which is just a formula that analyzes data such as historical prices and volatility to arrive at a price, as well as price skew, which is a mechanism that keeps the AMM's liquidity balanced between up and down sides of a market to arrive at the price for the positions within a market. If you want information on these, you can check the Thales Gitbook out. And then overtime uses odds transmitted to the blockchain via Pinnacle Sportsbook. And they take in all different kinds of data points into consideration when coming up with odds for the different teams and games that they provide markets for. The way the pricing works for a tokenized position in a market, you are buying a single tokenized position for a fraction of a USD, and that's how the pricing is displayed. So prices for positions on Thales go from 0.1 to 0.9 at the moment, and then for overtime, they are at 0.05 to 0.95. And the best way to think of this is each market's position as its own token. So on Thales, a market will have an up token and a down token. For overtime, there could be a home win token as well as an away win token. And you're paying a fraction of a USD for each of these tokens. And then the token's value depends entirely on the way the market resolves. So if you win, you paid a fraction of a USD for each position, and now you can redeem each position for one whole USD. Now these prices that we just ran through are dictated by the odds that underlie the prices. And then they're displayed in a couple of different ways. Thales uses normalized implied odds format to display, and it just shows the chance that a position will be successful as a range from 0.01 to 1.00. But again, there are limitations on the range for prices for Thales and overtime, like I just said. The best way to look at this, like 0.43, can be translated basically to a 43% chance. So it's a pretty easy translation with that format. Overtime also provides a couple of other formats to display their odds. They can show in decimal odds, and that displays the amount a position of $1 would pay out if successful. And there's also American odds or money line odds. So pricing for American odds or money line odds is a little bit different. It actually provides a different value if you're buying a market for the favorite or the underdog. So for example, if the price for a favorite is negative 130 and green always displays the favorite with a minus sign in front of it. So if you put $130 into a position and you won, you would receive $230. So that's 100 USD profit. So it's always showing you what you would need to pay to make $100 profit. For the underdog, it's a little bit different. Plus 130, which is always going to be in red with the plus sign, means that if you bought a position of $100 USD, you would get $130 of profit. So you put up 100 USD, you would receive back 230 USD, and that's a 130 profit, so plus 130. There's more information about all these odds formats in the overtime Gitbook. So pricing translates to payout in this way. Once you've purchased a position, you wait until the market resolves. And if you've won, you can redeem each of your positional tokens for 1 USD. So if you only bought one away token and you paid 43 cents, and then the away team wins, you can come back and swap that token for 1 USD. If you bought 10 tokens at $4.30 and you win, you can come back and turn that $4.30 investment into a $10 payout. Now, if the position you purchase loses, your token's worthless. You can also sell your positions back to the AMM if positioning is still open. So you don't have to wait till market resolution, whatever happens, but throughout time, the value of that position will change. So whatever you paid for it, you may not get that exactly the same back. And that's a good segue into how odds can change as well, and that will change what the price displays or for each position is worth. So these odds will change throughout time. For Thales, price movement could affect the price of each position because the strike price is now indifferent relative to the actual price at the moment. So that will affect the odds that price will either be above or below that strike price throughout time. And then sportsbooks are constantly updating their data depending on things that happen in context of the game. Game conditions can change, players can be injured, all kinds of things can affect those odds, and so they change throughout time. So if you purchase a position and there's a few days until the market resolves, there's a good chance factors will change that will affect the pricing for that position. And that's why you say you can sell your position back to the AMM. Maybe it'll be more, maybe it'll be less, but it will most likely change depending on the way things happen. So let's look at some examples. This is a Thales positional market for ETH. And I took this screenshot on 10/21. The market here has a maturity date of November 4th and the strike price of 1420, so 1420. At the time that I bought this position, the current price of ETH was 1304, and I paid 0.22 for each position. So if I put $1 in, I get 0.22 positions. And again, if the price of ETH is above 1420, because I'm buying an up token, I spent 0.22 for my one position. I can come back and exchange that for one whole USD. But as time goes, things will change. So I came back a few days later on 10/24. There was some lightly positive price movement for ETH over that weekend. You can actually look at the chart. So, you have to way zoom in here, but there it is at 1303. And there is a slight tick up to 1346. So now the odds, at that the price of ETH will be above 1420 on November 4th as of 10/24 are actually better. So that means you have to pay more for a chance to redeem one USD. So in this case, if I wanted to buy one position, it would cost me 31 cents. And if I win, I can come back and claim one USD. That's a lower profit, right? I'm only making 68 cents in that case, whereas when I bought the position earlier and when the price of ETH was lower and therefore farther away from the strike price, I would have made 77 cents. So then let's take a look at some examples from overtime. And this is what it looks like for odds displayed in American moneyline odds. So just to go through that quickly again, here's Everton plus 157. So if Everton wins this game and I put up $157 for my position, I can come back and claim 257. That's only if Everton wins on this market. Now, the other way around, if I'm buying for the underdog for Crystal Palace here, I would have to spend $100 on this position. Crystal Palace wins, and then I can come back and claim $293. So that's a $193 profit. Here's what it looks like for decimal odds. So again, this is the amount a position of $1 would pay out if successful. So if I bought $1 worth of Liverpool win, and they do win, I can come back and claim $1.29. And you can see Nottingham Forest has a much lower chance of beating Liverpool. So if I bought $1 worth of these Nottingham Forest tokens for this market, and they do end up winning, which is unlikely, I can come back and claim 9.90 SUSD for that market. Finally, here's what it looks like for normalized implied odds. And again, you can basically translate this to a percentage of a whole one. So Everton has a, basically 39% chance with this case. Spend 39 cents. If they win, you can come back and claim $1. And now here we'll talk a little bit. So all kinds of things that can change throughout time. Before one of these games starts, this was looked at, I think, on October 21st. But if Sadio Mane, oh gosh, he doesn't even play for Liverpool at this point. If Salah gets hurt, these odds could change because then maybe Nottingham Forest has a slightly better chance to win. This is often the case with teams in general. Maybe just form changes over time. These odds could update. I know that sometimes too with NFL, home games are a big boost, so the home team will generally have slightly higher odds than they would if they were away in that matchup. And even with things like Major League Baseball, the pitcher who is projected to pitch for the game, if that changes slightly or suddenly, that could slightly change the odds and therefore the price for each position for a market for a Major League Baseball game. And one thing to note, soccer or football includes a yellow draw option because that is a possibility for this game. But other sports like basketball or hockey, there is no draw option. So let's take a look at some overtime markets. This is a market. I took the screenshot on 11/16. The game was the Cardinals versus the 49ers. And the Cardinals were the underdog here. So if I spent 27 cents to buy one position and they win, I can come back and claim $3.77, which is a profit of $2.73. But when I came back a few days later on 11/21, things had changed. For whatever reason, I'm not exactly sure. I didn't follow these teams. But over time, it became less likely that Arizona would win. So now prices for positions are even cheaper. And if I bought on 11/21, I could spend $1 and I could get, 4.1 positions. You can see here. So if they win, I can come back and claim $4.10, which is a $3.10 profit. Whereas on 11/6, if I bought for the Cardinals and I spent $1, I'm only getting 3.7 positions, which means had I bought on the 11th and the Cardinals win, I can claim $3.73, but that's a lower profit because things had changed at some point and it seemed more likely that the Cardinals would be able to win on the 16th versus the 21st. So that's a breakdown of how odds inform prices for Thales positional markets as well as overtime sports markets. Just kind of a quick walkthrough of how those odds can change and why, and how that can affect the prices of the positions that you could potentially be holding, and what it looks like when you do successfully win a position, what you claim versus what you paid. So hope that was helpful, and have fun trading.
You